Hello Bria. So in the next in this video we will first fill these entries. So the share capital in shareholders equity is very simple because it's already here. Here we can see the share capital is this one, and the company didn't issue any new stocks, so this remains the share capital. So we have to write this number to the share capital, what we could see. The next one, what we need is including the face value of treasury stock, where the face value of treasury stock, it's a tricky question because we can see here that we have a treasury stock here, which is 2200, but it's not exactly the face value of the bought back. So the company has bought back some shares which originally issued, but we have to record these back bought stock not as face value but as market value. So this is the market value of the back bought stock, and it's not appropriate. So in order to get the face value of the stock, we have to multiply the share capital by the how much percent the company has repurchased of its shares. It's 10%. So as a result, we have to multiply by 0.1 this share capital to get how much is the face value of treasury stock. Okay, so it's very important. So to this cell, I'll write it because it requires some calculations. We have to multiply by this share capital, so the face value of treasury stock. I start a new one. So FV of treasury stock, it must equal to this one times 0.1, so this is 14,200. This is the exact value of this amount. Sorry, with 1 0 less, so this is the face value of treasury stock. Okay, so the next entry, we need the unpaid share capital. It's very simple. It's unpaid share capital from parent company is this amount, so we can calculate it easily. Let's see the capital surplus. So the capital surplus must be here somewhere. Well, this is this amount, so it doesn't increase by any means. So this is the capital surplus. After this, we need retained earnings, which has a debit account, so it's minus. Or we have to watch out is that it's a minus amount because it is a debit account. If it had a debit credit balance, it would be positive, but this means that the company had loss in the previous years. So this is the sum of the losses which the company incurred. And what else we need? Well, we need the restricted reserve. It didn't change also, so it's still this amount. We need the value adjustment reserve. Well, it's this one, so we can record this also. And we have calculated net profit for the year in the previous exercise. So you can see that the net profit of the year, well, it depends on the dividends, but we have calculated already the dividends, and the amount of dividend that the company had to pay was here. So this was the amount of dividend which the company paid. So it was 15% the profit after tax. So I just write it here. So the company didn't use any of the retained earnings for dividend payments. The question didn't ask us to use any of the retained earnings. It can't even use it because it's negative. So if it's negative, then we can use 0 amount from it to pay dividends. And the company has paid 15% of the its profit after tax as dividend, and after that, if I subtract dividends from the profit after tax, then I get the profit of the company, net profit of the year, and we have to put this amount here to the net profit of the year actually. So this comes to net profit of the year. And evaluate the company's ability to grow from internal resources. We have to check the percentage of shareholders' equity to the total assets, and well, we don't know actually the total assets, yeah, because we don't have balance sheet data, but the company's ability to grow from internal resources, we should we have to watch out for that. The company has negative retained earnings, so this means that the company couldn't grow from his own sources because he had a lot of loss in the past. This means that the company had to issue some stock, or he had to issue some bonds, or have some more debt in order to finance itself. So if the more is the retained earnings, the more the company can grow from its own resources, but it was now negative because of the debit balance. So the company had difficulties with his finance. So his opportunities were not very good. And here at the second exercise, it's a very easy exercise actually. We have to categorize these entries, these journal entries or accounts, sorry, these accounts to three categories: receivables, long-term liabilities, and other current liabilities. The long-term liabilities is easiest. It's what starts with the 44. So these two entries, the long-term construction credits and other long-term credits here, belong to long-term liabilities. So it's extremely easy. We have to add these two numbers and we get the long-term liabilities. But it's a little bit more tricky to decide whether one account belongs to receivables or other current liabilities. Well, one can say that if it starts with a 3, then it will belong to receivables, and if it starts with a 4, it belongs to other current liabilities, of course, except the entries starting with the 44. But we have to also watch out for 3 groups of accounts, and let me write these. So one group is the 362 and 363. Another group is the 463, 464 accounts. And the third group is the VAT accounts 466, 467, and 468. Because the 362 has a debit balance and the 363 has always has a credit balance. Well, the accounts starting with a 3 usually have a debit balance, but this is an outlier, and we have to subtract the balance of 362 from 363. If it's negative, then we record it as current liability, and if it's positive, we'll record it as a receivable. So let's see, what do we get if we check that. 362 minus 363, yeah, and here is a trick, because if we subtract this one, so from 362 the 363, we can see that we get a negative number. As a result, the balance of these two accounts comes to other current liabilities. It's very hard. Okay, and because usually these current liabilities have a credit account, but now we have to get the balance of their balance. Okay, the next one, what we need here is, let's see what other outliers are there. The 363 and 364. 363 usually has a credit balance. This 364 has a debit balance. It's also an outlier because the accounts started with the 4 usually have credit balances, but this 464 is an outlier. It's not usual. And we also have to calculate the balance of the 363. We have to minus the balance of 364, and if it's positive, then it comes to current liabilities. But if it's minus, then it comes to receivables. Let's see what is the situation here. Well, 663, 364. Yeah, we can see that if we subtract from this one, I get a positive number. As a result, we can record it to the other current liabilities. So it fortunately it doesn't mean any problem for us. You don't have to switch the location of this liability account. We don't have to put it to receivables, as in the case which we have seen with the example of these two accounts. And we have another group of accounts which are considered outliers, the VAT accounts. Well, the 466 account always has a credit balance. So sorry, not credit, debit balance, although it's a liability officially. So it will have a debit balance. The 467 always has a credit balance, and the 464, the question has to say what kind of balance does it have. So it's a debit balance in this case, but it can both. It depends on the question, and we have to calculate the balance of this VAT account. If it has a debit balance, if I sum the balances, then it will consider as receivable, and it has a credit balance, it will consider as a liability, current liability. So let's see, this is the debit balance of VAT purchases, 466, minus the credit balance of 467, and it also has a debit balance, so we have to plus 96,000, and we have got a credit balance, because a negative debit balance means a credit balance, so the VAT also has to be recorded as other current liabilities. Okay, and one more thing, it's very important that there are some accounts which start with a 4, although they have a debit balance. So the account starting with a 4 usually has credit balances, but some of them have debit balance. These accounts, except the VAT, because we have also recorded VAT as a current liability with this amount. Well, if some 4 accounts starting with a 4 has a debit balance, this means that it's not a liability but a receivable. So as a result, we have to consider it as a receivable. So this personal income tax liability, which has a debit balance, this means that we will receive money back from the state. So we don't have to pay this money. We have accounts receivable against the government to receive later this money. This is why it is considered as a receivable, because it has a debit balance. Okay, so in summer, I give a summary of this exercise. The accounts starting with 3 are receivables, accounts starting with 2 4s are long-term liabilities, and accounts starting with a 4, not 2 4s, are other current liabilities. But we have to watch out for these 3 groups of accounts, which I have written here, because if the balance of these accounts, if I subtract the balance from 362 minus 363, and if it will be a negative number, then I can record it as a current liability, of course, as a positive number. Okay, and the exercise 3, it was also an easy exercise, so we had to explain what these balances mean. The write-down of other machines, 148, well, it has a credit balance. This means that I have to reduce the amount of my machines by this write-down of the machines balance. The value adjustment of buildings means that I have to increase the value of buildings by this amount, by this balance. It doesn't stand here by how much, but this means that I have to increase the value of them because it has a debit balance. So account starting with a 1, and if it has a debit balance, it will increase its value. I have to change, so the change in our manufactured inventories. This means that the company has produced more products than he sold. If it has a credit balance, and this is the case here, if it had a debit balance, this would mean that the company has sold more products than he produced. And well, how can it be? Of course, there were some inventories in the company, and if it has a debit balance, this means that the company has sold more than produced. This means that the company sold some of its inventories, and it always has a credit balance. The 582, the 581 can either have a credit or debit balance, but this last one always has a credit balance, and this means that how much assets the company produced for his own use. So it always has a credit balance, and this means the increase in the assets which the company produced for his own use. Okay, thank you for that pleasure, Pulan. Please write me if you have any questions.